Okay, hi. Hi, everyone. Welcome to JEDi episode 8. My name is Jimmy, and with me today are Ethan and David. For those of you who tune into our Facebook Live for the first time, and if you want to know more about us and the name JEDi, do check out our first episode in the video section. I'll be the moderator for this episode, so here's how we're going to run through. Firstly, Ethan and David will have a fireside chat on credit card hacks part 2. And then I will cover the bonus section on how to read insurance policy illustration like a pro. Then last but not least, we will have a Q&A section for the current episode. So feel free to post your questions in the comment section and we will address them during the Q&A section. Okay. So without further ado, let's start the ball rolling. I'll let Ethan start. Ethan?
Okay, hi everyone. I'm Ethan, founder of PolicyWoke. Okay, so today we'll go straight into the table of contents because there's no questions from the last episode. So these are the things that we're going to cover: balance transfer, the terms in credit card, spotting rewards opportunity, and other cashback cards sharing. So let's think about what is a balance transfer. I'm not sure how many of you know about this, but yeah, it's actually a kind of a way to shift your money from credit to real cash. Yeah, so real cash, mind blown, right? And nowadays, there's a lot of balance transfer that's telling you that is at 0% interest and there's a bit of processing fees. So is this really what you think it is? Are there some other kinds of penalties, or is there a catch or not? So yes, definitely there will always be catch. So this balance transfer allows you to use the cash as you deem fit, but you will also need to be able to pay it back promptly, and or else you'll incur a penalty. And the penalty I'm talking about will be the 26.8% interest, or at least 24% interest that is charged on your credit card. So imagine you never pay off. Yeah, the amount of interest will be at least 1 point something to 2% per month. So normally for this kind of balance transfer, there is 3 months, 6 months, 12 months. But normally 6 months gives the best rates in terms of the interest rates. But do explore it, as it may change from time to time due to promotions. So let's move on to what are the terms in the credit card, especially the very important terms. So, okay, number one is the EIR. We call it the effective interest rate and also interest rate. So just take a look at the slides. Okay, it says that there's an EIR of 2.06% and interest rate of 0.5%. So let's say imagine you're taking a balance transfer, it shows this. So how do we derive this from it? Okay, so you still remember the previous slide where we talked about processing fees? So imagine the processing fees, right? There is a 1% processing fee. So that will goes into the EIR of at least 1%. And the interest rate of 0.5%, but within 6 months, you must clear it. So what does it mean? That 0.5% of fee will be charged during that time, but you need to pay it off upfront for 6 months. So if you look at it in that way, then the ERO will come up to about 2%. So where does that 0.6% come from? Okay, if you are using your credit card, it will be actually the minimum balance that you need to pay every month. So that will form that 0.06%. So it comes up to 2.06% for this. So remember, EIR is actually the interest rate that factors in your cash flow, the amount of money that goes in and the money that comes out. Okay. So the number two important thing is actually the MCC codes. For short, we call it the merchant category code. So why is this very important? So we have talked a lot about cashback in our previous episode. So a lot of these are actually affected by this MCC codes, which call it merchant category code. So for example, the Maybank Family Reference, it says food and online delivery. As mentioned by the previous episode, David did say that when he called for delivery through the Burger King app, it did not register. So why does that happen? It's actually because of the MCC code. It's not the MCC code for the 8% cashback. So that's why it actually affects your spending category. So you need to be very sure of what cashbacks and the MCC code can get in order to achieve the maximum cashback that you can get. So this is something that you need to really explore around. Okay. For the third one is late payment charge. Okay, normally there is a flat fee. Most banks have $50 to $100. So this is in the event that you did not make a single payment. Then they will start to charge this late payment charge. So if you think that you can just pay the minimum sum, then you may be in for a huge surprise, because there is also the part 2, which is the interest on due amount. So this actually affects the due amount shown on the statement and not the amount that you pay off. So imagine what if you owe $1,000 for the month, like let's say previous month, but you only paid $500. So does this mean that the interest will be charged on the remaining amount, $500, or on the 1,000? The answer is 1,000, because it is actually the interest on the due amount shown and not interest on the amount that is outstanding. So you need to be very sure of what you are paying. So never ever not pay any of your credit cards. So it's very important for this. Okay, so let's go on to the next part, spotting rewards opportunity. So this is something that we really do a lot. Okay, so let's give a few examples. So I think almost everyone has been using Grab for the past at least 6 months, at least from what I know. So there are actually periodic deals that actually they mention it as flash deals. So these are actually a redemption using much lower Grab points for the same item. So for example, pizza that time there was a flash deal where you just need 1,250 points to redeem for a pizza, compared to the normal redemption rate, which is 2,500 points. So if you translate back to the cashback that we take, so for example, now there's a 0.8% cashback when you do Grab spending. So if you have a special Grab points 50% reduced, that translates to a double amount of 0.8, which is 1.6% cashback. So this is the kind where you can stretch your points redemption. So the second type of points redemption is for miles. So there are actually quite a number of saver flights shown for miles redemption. Some changes, especially for miles or during the miles website there. So you can see that it may be 50,000 miles redemption, but because of special promotion rate, they may just require 45,000 miles. So the amount of miles that you save, right, actually boosts the cashback or the miles, so that you can stretch your dollar for this. Okay. So the third way that we actually spot all these rewards is through vouchers and promo codes. So feels a bit like the previous olden days where you take your coupon, you cut the coupon and present the coupon to the merchant. So yes, so now no longer using coupon, but using online promo codes and vouchers. So there are actually quite a number of ways that you can stack vouchers. For example, like in Shopee, there is a recently introduced platform voucher and shop voucher. So you can actually purchase platform vouchers for that maybe about 13 to 14% cashback. Then if the shop also have, then you can actually add on to the shop voucher, and you can stack all this together to have more discount. So this also applies to Foodpanda, whereby you can go to Shopee and buy Foodpanda vouchers. Normally it's about 10% discount. Then for the remaining amount that is charged to your credit card, you should also use the best credit card for it. So in this way, you are saving a lot more. So let's say it is 8% and 12%, and you are using a $25 voucher. So that is maybe a $3 that takes 8% cashback. But $25 is on 12% cashback. So it's not too shabby. And if we have to add in one more layer, it's using a credit card to stack that into that 12%. So we should imagine you are paying $22, 5% discount on top of this $22, then the $3 saving for the $25 voucher. So you can see that it actually adds up a lot if you stack it up. Okay. So now let's move on to what are the other cashback cards that is frequently and valued. So for this, I'll need David's help. So on to you, David.
Okay, sure. While Ethan was presenting just now, I logged onto Grab and I bought 2 peso vouchers because it was on flash sale, and 2 Starbucks vouchers.
Hey,
Yeah,
you
so
didn't tell
yeah,
me.
it's happening right now. Yeah, it's happening today. Yeah. So so today I'll be sharing on 2 other cashback cards. So these 2 cards I would say would be very useful. The first one is the OCBC Frank card. Recently I wrote an article comparing the OCBC Frank card and the DBS Live Fresh card, because DBS Live Fresh they give 5%, whereas OCBC they give 6%, and for me I think it's better, so I applied for this OCBC Frank card, and it's very efficient. So there are 2 categories. One is online spending, and the other one is in-store mobile contactless spending. I call it PayWave or Flash Pay. So it's just paying using your phone. You could technically, anybody with a phone could also use your card to pay and get the same cashback. So if you have a huge family, you could all just pull together your spending and clock the cashback. So for this card, actually both Frank card and DBS Live Fresh, they both have a cap. For DBS Live Fresh is $20 cap per category. For OCBC Frank is $25. So to me, this is much better. It will give me an additional $10 per month cashback. And because the cashback is 6%, so technically I spend about 800 for the DBS Live Fresh, I get back $40. But for this card, if I spend 800, I'll get a bit more than that. If I spend 833, I'll get $50 cashback. So it's also better because it allows me to spend more on one category. So I can spend up to 416.67 in each category. For my personal spending habits, I spend more on online spending. So I'll probably max the online part, and the rest I'll use the mobile contactless for the rest of the spending. So minimum spend is 600, similar to the DBS Live Fresh, but maximum spend is different. So OCBC Frank allows me to spend a bit more if I need to. So 6% to me is slightly above my average. So I would consider this card as my third best card to use. Yeah. Of course, my first best card to use right now would be the MCO card, which gives 10%. The second best card would be Maybank Family and Friends, which gives 8%. And this OCBC Frank card, which will start this 6% in 1st July onwards. So this will be my third best card. It will effectively replace my DBS Live Fresh card. So yeah, farewell to DBS Live Fresh for now. Yeah, actually I used to use this OCBC Frank card before it was nerfed. They used to give 6% online spend, and also Nets Flash Pay top up. So at that time, it was quite fun. So you use your OCBC Frank card to top up your Nets FlashPay card. Then you go to this Nets FlashPay machine, and then you withdraw it to your bank account. Yeah, so that was in the past. Yeah. Yeah. So this is for OCBC Frank card. Good to see you again. Yes. So the next card would be the UOB1 card. This would be my general spend card and my SP services card. And actually, I've not used this for Grab so far because I have quite a bit of Grab credits from my MCO card top-ups and also from my previous UOB1 card top-up. So I still have some, so I don't use it for Grab yet, but maybe in the future, in 2 or 3 months' time, I might. We'll see. But mostly, I put this for my SP services and for some general spending. So for me, I try to clock 2,000 per qualifying month in each quarter. The way this card works is that you have to spend for 3 months in the quarter, and you have to make sure that that 3 months is the correct 3 months, because once you apply for the card, you might be prorated. You might only need to spend 1 month or 2 months or 3 months. So when you get the card, just call in to check whether it's prorated or not, what is your qualifying period, what's the start date, what's the end date of each month of each qualifying period, so that you know that you are spending in the right time. Otherwise, you're just wasting your cashback. I don't recommend going for the $500 or the $1,000 per qualifying month because it's only 3.33%. To me, anything below 5% is something that I would rather not optimize, not spend the effort to optimize. And this UOB1 card is quite intensive in terms of optimization because you have to track that you spend exactly $2,000 per qualifying month. You have to make sure that the once you pay for the item, it cannot be too late in the month, in the qualifying month. Otherwise, you might risk the the spend being pushed forward to the next month because maybe the merchant had some delay in the processing. So it's better not to. For me, I rather play it safe. I'm very conservative, so I want to make sure that it ties in properly and I get the full 5% or 6% for SP services. If you use SP services and you are paying your bills, there's this current promo or cheat code. You send in a SMS to this number 78922. It's RBP space then your handphone number based on your authorization OTP number, and then you will get I think a $10 rebate for doing this in the first 3 months. So if you happen to see this and you want to improve your cashback, then go ahead, try to get the $10. Join me. I think that they are trying to encourage people to use this to pay for their SP services bills. You have to use the SP services app to pay for this this bill every month. So it also helps you to keep track of how much you are spending. Everything is digital. It's very easy to track, and I think it just makes life simpler for everyone. Yeah, you could pay for your own bill. You could pay for your actually you could pay for anybody's bill as long as they invite you to their group. You could pay for anybody, even if you're not related. Yeah, so I could pay for Ethan's bill. I could pay for Jimmy's bill. No problem. All they need to do is to invite me to their group. Then I can help them pay. So this 6% is actually not too difficult to clock if you have a just get a group of people lah. Yeah, $2,000 per month. Not too difficult. Yeah.
So when you say about the caveat, right, is it AXS that cannot be accepted?
Oh, no. You use the SP Services app, and then you pay through this app using your UOB One card. You do not use AXS. I think right now AXS is almost useless. Yeah.
Yes, that's kind of sense.
Okay, so thank you, David, for sharing. Do you still have anything to add?
No,
No, you don't have any questions?
no. So far,
Currently, I don't see any. Yeah, so maybe we can move on to the bonus section
Okay.
first. Okay, so Jimmy, your turn.
okay. Thanks, Ethan and David, for the fireside chat on credit card hacks. So now I would like to start on the bonus section on how to read insurance policy illustration like a pro. So whenever you meet a financial advisor and the advisor recommends some insurance policies, it's best that you request for a insurance policy illustration of the insurance policy if the advisor did not give you one first, right? So why is it important to get the policy illustration? So next slide. Okay, so for the purpose of context, I'm referring to cash value insurance policies. That means policies that have surrender value component. Okay, so why is there a need to read policy illustration? This policy illustration helps you to not only helps you understand the policy structure, but it also helps you to understand the costs that are involved in holding those policies until maturity. So for any cash value insurance policies, if you read through, right, you can see that normally you can find this from the introduction paragraph, which is buying the insurance policies can be a long-term commitment, and early termination of the policy involves high cost, and the surrender value payable may be less than the total premiums paid. Okay, so I'd like to touch on why there is this paragraph in the policy illustration. So next slide. So in the policy illustration, there are two main tables that you need to know, which explains the cost involved in the policy. So the tables are total distribution cost and the effect of deduction. So let me drill through the details of this cost. So the first thing, the total distribution cost is actually the sum of each year's expected distribution related costs without interest. So this distribution cost normally consists of the commission that's payable to the financial advisor, the cost of the benefits of the insurance policy, and the services payable to the distribution channels. Okay, so if you look at your policy illustration again, if you flick through the document, normally you can find this total distribution cost as a standalone table in an endowment policy or as part of a summarized table when putting side by side with the premiums and the effect of deduction. Normally you can find this table in an investment linked policy. Okay, so as you look, if you look at the distribution cost year by year, as the years goes by, in the beginning years, like year 1, year 2, right? Normally the total distribution cost as a percentage of the total premiums paid is pretty high. So as the years goes by, in the later years, the total distribution cost distribution cost as a percentage of the premiums will be less and less. Okay, so I'd like to touch on the effect of deduction. So what is this effect of deduction? This effect of deduction is also known as the table of deduction, which is the difference between the total premiums paid to date and the sum of the surrender value. So what is these differences? These differences is the accumulated value of deductions for the following, such as the insurance cost, it includes the distribution cost that we mentioned previously, the surrender charges, the tax payment, and the expected transfer to the shareholders of the life insurer. Okay, so normally if you look at the policy document again, normally you can find this table of deductions as a standalone table in endowment policies, or as part of a summarized table when combined with distribution costs and total premiums in an investment-linked policy. So as you look at the values of the tables, right, as from the beginning of the year towards the end of the year, the maturity year, okay, if you look at the values of the deductions, right, normally in the earlier years, the value of deductions is equal or very close to the total distribution cost, which is mainly why normally in the first year, the surrender value is either zero or very small number, right? So as the years goes by in the later years, the effect of deduction as a percentage of the total premiums paid will be less and less. Right? So to sum up, right, the next time an advisor recommends a cash value insurance policy, or if you have already bought an insurance policy, and if you have time, please look through the policy illustration so that you know what are the costs involved with regards to this insurance policy. So that if you look at this table and the numbers, right, it can condition your mind to understand the importance of holding these policies to the maturity, so that you will get the most out of the benefits of the insurance policies. So I hope you understand this point. So with that, we have come to the end of this bonus section. We hope that you find our Facebook Live valuable for your own credit card spending, and we hope we have shaped how you read these insurance policy illustrations. So we are now going for the Q&A section. So it's time for you to, if you have any questions, it's time to post your questions in the comment section, as we are now addressing them. So let me have a look at the comments. Do we have any questions so far? So far there's...
Actually, I have a question.
You have a question? Yep.
If there's...
What is it regarding?
Ask, right? If you know, because we look at so many policies, when people want to sell their policies to us, we look at so many of them. Are we able to share, like, what are the things that we look out for in terms of their benefit illustration? What are the policies that we look out for when we want to buy them?
Ethan, you want to comment on this?
What are the things that we look out for? I think it's nothing to do with policy first. It's a lot to do with what's the reason. Why are they looking at their policy first?
Yeah, so you mean we first look at the reasons why they want to sell the policies to us, right?
Correct. Because that is very important actually. As mentioned earlier by Jimmy, right? Especially at the introduction. Okay, what does it tell you? Insurance is a long-term commitment, right?
Yes.
Yeah, so that is why when anyone buys an insurance policy, it's with the mind that they are going to hold the policy for maybe 25 years or at least up to the maturity date. So that is the first thing they want to know. It has nothing to do with policy already.
Yeah. So I mean like when it comes to reasons, we look out for reasons that relates to financial constraint. Like for example, if you have a loss of job income, or you have a reduction of job income, or you have incurred any form of credit card debts or mortgage debts. Yeah, those are the reasons that we accept. We can't accept when you are planning to sell your policies to us, right?
Yeah, and actually we had an earlier meeting with one of the financial advisors, right, Jimmy? So actually we also shared that when you have a policy, right, actually there is not just an option of surrender or selling. There's actually a lot more options. For example, like making the policy to a pay up capital, maybe taking a policy loan first, because if you are quite sure that within the 2 years you can find a job that can pay off the loan, right? Yeah, then that will make sense, because you have to look at how much you are going to lose in terms of opportunity cost versus the policy itself. So that is actually a very important criteria of whether you should keep or maybe just to surrender or sell. So that actually constitute the whole thing about why you should sell. So instead of looking for us first. Yeah.
Right,
Yeah, but
right.
if you go into the technical details, right, it's more of the date of inception, the premiums are going to be paid, or is it a limited pay? Has the premiums been paid fully already? Yeah, so there's quite a number of things that we look out for. And if in terms of looking at the policy, it's a lot about what's the cash value, and what are the benefits that bring to you, basically.
We also take into account whether there's any deferments to the premium payment, right? Now that some insurers allows the premiums to be deferred, right?
Correct.
Yeah. So, cool. So, do we have any new questions? Let me check. So far, there's no new questions. Okay, so before I forget, so let me just remind you that the next time a financial advisor recommends any cash value insurance policies to you, and if he or she did not send you a copy of a policy illustration, please request for a copy so that you can have a look and understand the policy structure, and also to understand the cost breakdown in regards to holding the insurance policy. Okay, cool. Right. So, do you have any more questions? Yeah. So no questions. David, any more questions?
Not really, no.
No. Is there anything about credit cards that we need to highlight again, or just in case, for the benefit of someone who joined late? Is there any specific highlight that we need to?
Okay. I think this is something that, maybe David first. Sure.
Sure. So, a credit card to me is like a tool. It can be an asset or a liability. If you use it in a certain way, it can be a asset that produces non-taxable income. If you use it as a liability, it can give you a lot of headache. So if you don't mind talking to credit card phone people who help you over the phone, then it's okay. But if you don't like calling in and asking about the terms and conditions and all that, then maybe don't try to push the envelope. Yeah. Personally, I push it quite hard. So, yeah. Like for example, some banks are more lenient in their the credit limit that they give you. If you earn like beyond 120K, the credit that some banks would give you is a lot higher than other banks. So it's good to go around and shop and see what's available. Yeah, so like I said, credit cards it's like it can be an asset or it can be a liability. Yeah.
Yeah, I just remembered some of my own analogy about credit cards. Okay, imagine I called in for a balance transfer. Okay, you know what product I was pushed or not? It's a personal loan product. So the EIR is extremely different from balance transfer and personal loan. Personal loan EIR can go up to 7%, and the nominal interest is only 3.5%. So if you didn't hear it clearly, right, you can so-called get misled by even the call center people. So what makes me noted about that or notice it is because of the monthly payments, number one, and number two, the total interest charged to me. Yeah. So the total interest charged to me is 3.5%, but I'm paying it per month. So that effectively makes up the ERR to be extremely high. So that was where I actually told off the person. I said, this is the calculation. So what you're telling me is not the entire picture that you're telling me. So I had to push that person to give me back the balance transfer instead. So this is something I have to take note also. You must know your step. You must know what you are doing really. So if not, you'll be in Chinese they call it 牵着鼻子走啦. So people will be pushing you to take things that you don't want. So this is something that you really need to understand. Yeah.
Usually when you get this kind of phone calls, just ask if they have anything under 2%, because normally they will try to sell you the usual stuff, but if you ask them specifically for something less than 2%, then they will try their best to find it for you. It might not be immediately, but they'll probably have to ask their manager or someone else. And maybe they'll call you back in 2 hours time, and then they'll find it for you. Yeah.
So this is some of the tips and tricks that when we are doing all these, consider credit hacks already, not credit card hacks already.
Yeah, credit hacks. Yes.
Yeah.
Okay.
Yeah, but I just remember when you make payment also, sometimes bank transfer payment to the credit card may takes up to 3 business working days. So you really need to plan paying your credit card well. If not, you will be incurred the what late payment charge, what interest, I think a hell lot of a headache. You have to handle that. Yeah.
Yeah, just try to
Especially
pay 5 days in advance, 5 business days in advance.
the time that you spend calling to them to get waiver, to argue with them, I think it's not worth it, honestly.
Just one week in advance, which is 5 business days in advance, is a safe day.
Right.
Yeah. So I think
Or if you cannot make it 1 week in advance, just go to the bank and pay at the counter. Same day also can.
cash, right? That means.
Yeah, of course. Then you want to use credit card to pay.
Maybe people use debit card. I don't know, man. So they need to.
No, cannot.
We have to be very specific. Yeah. So I think we don't have much time already.
Okay, Ken. So with the interest of time, so we're going to end this episode. So right, guys, thank you for tuning in to Facebook Live. Feel free to post questions in the comment section. As we are not going to remove this video. This video is going to be remain in our Facebook page. right? So any questions, post in your comments. We will address them during the next episode. So speaking of the next episode, join us next Friday, 5 p.m. for JEDi episode 9 on CPF Hacks Part 1. So if you like our content and be notified for future episodes, do like our page on Facebook and share this post. We have our Telegram channel as well. So if you scan this QR code, it will lead you to our landing page. You can click on the Telegram channel to join us on Telegram. So this Telegram channel showcase the list of insurance policies that we have our inventory. So if you would like to know more about this list of policies, do join us on Telegram. Normally, this Telegram channel is open for accredited investors and financial professionals, but we do not restrict anything. Anyone is free to join us on Telegram, right? And our YouTube channel is for us to upload all these Facebook Live onto YouTube for all the YouTube viewers to watch. Yeah, so with that, we hope to see you next Friday on Facebook Live, and may
May the
the
finances
Finances
be with you.
Okay, goodbye.